So today, SoundHound AI sunk with the rest of the market. SoundHound was down 9% or 88 cents on the day. It did close off the lows that it had set at $9.10. And price also finds itself in a weekly zone, and this blue horizontal block represents daily buyers. Now, SoundHound sunk today as investors adopted a more risk-adverse position heading to Nvidia's earnings later this week. Now, let's get into the specifics, and then we'll get back to the charts. So, AI stocks were growth-dependent valuations got hit hard on Monday, trading as investors moved to reduce their exposure in case Nvidia disappoints fourth quarter results on Wednesday. SoundHound AI's valuation was also pushed after reports suggest Microsoft won't be moving ahead with some of its data center expansion plans, which raised concerns about the broader growth outlook for AI plays. Now, SoundHound has been volatile over the last year. The company's share price is still up roughly 141% over the last 12 months. Stock has fallen roughly 52% across 2025 trading. Given the market shape potential for Nvidia's upcoming Q4 report on Wednesday and the arrival of SoundHound's own Q4 report the next day, shares are seemingly poised for more big moves. Now, in last quarter, SoundHound raised its full-year sales target for 2024 to between 82 and 85 million. At the midpoint, the guidance range, that would mean year-over-year sales growth of approximately 82%. Not too shabby. The company also is said to anticipate revenue for 2025, which will be between 155 and 175 million, which suggests revenue could more than double this year. So even on the heels of the big sell-off, SoundHound AI stock probably isn't a good portfolio fit for risk-adverse investors, but for investors with high risk tolerance and a positive outlook on the business's expansion potential, the recent valuation pullback could represent a worthwhile entry point. All right, and so the charts are also suggesting SoundHound could be a worthwhile entry point. It was just got to go back to December, where price hit roughly $25. Price is now selling below $10. Now, if we zoom out to the weekly chart, this is that weekly buy level I was referencing. You have a rallying price, a basing candle in the form of a hammer candle, and then the rally out on very decent volume. However, price has now retraced. It did create a weekly sell level at $24. However, now price is at a level where let's see if the buyers are willing to defend this level. What I like also is that you do have a pivot high to the left, just below the beginning of the zone. And so, again, for risk-adverse traders, the charts are suggesting one can go long. You also have the 200-day moving average coming into the zone. That should serve as dynamic support. But for my money, I would have to wait for earnings because we could see a leg down, or again, for risk-adverse traders, you could see a pop. Thanks for watching. Subscribe. Please like the video.